The Q4 earnings season kicked off on this past Tuesday. There's generally considerable optimism about earnings growth this time around. Big banks led the parade as always. Let's see what our research director, Shiraz Mian, has to say in the early going here. And we're talking on the 15th of January, just for people to follow along on the calendar. Shiraz, I understand this time around the banks were expected to brag about a record year for the industry and the second straight year that their stocks collectively outperformed the market. But when they reported, I saw some of the bank stocks fell a little bit after releasing the Q4 earnings. What's the story with that?
On the whole, Terry, the reports are good, the internals are good, the outlook for the coming periods is good. I believe that the weakness in the bank stock prices is more in the sell the news kind of framework. You rightly point out these stocks have been stellar performers. In fact, the big banks have done better than the Mag 7 in 25. They were strong performers the year before as well. So I think some profit taking and moving to the sidelines makes perfect sense. There's nothing in the commentary that would justify folks giving up on the space. Would be my reading of these early results.
You think that going forward, the warning to the credit card issuers about this 10% cap on credit card interest rates is going to weigh on these banks if it's enacted?
Yeah, I believe this will be a recurring sentiment issue. I'm skeptical it'll be enacted, Terry. But you're absolutely right. This is a big new headline risk for the group. This, after all, is an election year, and this is a big industry. You noted management teams bragging about record years. You will not see these management teams bragging about record years or record profits and how good the whole thing is. But yes, there is an issue. It's a net negative for the group. It's a potentially problematic for the earnings outlook. And even if nothing gets enacted, it remains a headline risk for these stocks.
So what do you see as a main tailwind for the industry?
You know, the list is quite long, Terry. The outlook for the economy is good. And as you know, banks are very domestic focused, economically levered businesses. So whether it's household spending, whether it's business spending, they are very directly exposed to that kind of outlays. Across the board, these management teams have nudged up their outlook for loan growth. That has been the expectation for a while, and we see that in the numbers too. And that speaks to the economic leverage for these groups. You know that the Fed is cutting rates. The long end of the yield curve has remained relatively elevated, meaning the yield curve, the difference between the short and the long end of the curve, is steepening, which again is a positive for bank businesses. And even though these stocks have done fairly well in the last couple of years, by historical standards, valuations are still quite attractive. So there's a number of cyclical and market factors that should be good for their business, and that should be good for these stocks.
All right. So what's your scorecard looking like here in the early going?
So including all the results that have come out this morning, we now have 28 S&P 500 companies that have reported. Earnings are up 17.5% for these 28. Revenues are up close to 9%, 8.9% to be precise. 89%, 89.3% are beating EPS estimates, and 75% are beating revenue estimates. When we put these results from these 28 index members, Terry, in a historical context over the last couple of years, you would notice that the earnings and the revenue growth pace for these 28 show a notable accelerating trend. Uh, the EPS beat percentage is about in line with the historical average for this group of 28. The revenue beat percentage is a tad bit on the lower side. So we'll see how the picture evolves, but this is a pretty solid start.
So annual profit growth at the S&P 500 firms, from what I've seen, is expected for the 10th straight quarter. Is it too early to put a number on it yet?
So yes, the Q4 earnings growth will be the 10th positive uh, year over year earnings growth for the S&P 500. I'm currently looking at a tad below 9% year over year growth. Uh, if history is any guide, if we extrapolate from the results we have seen already, I can comfortably tell you it'll be north of 10%. So it should be uh, at least low double digits by the time all is said and done for the Q4 earnings growth.
Are you seeing expanding margin growth? And if so, what's the main contributor to that?
Finance and technology, the two of these sectors together, as you know, account for more than half of S&P 500 earnings, and the margin outlook for both of these sectors is very positive. There was a fear uh, all through 2025 that the tariff impositions would be a big drag on margins. That hasn't really happened. It's still it's still an ongoing story, so we wouldn't know for a fact. But on the whole, management teams have been very good at holding the line on their pricing and their expensing, and and margins have remained elevated. So uh, I think margins stay strong. They'll be higher than what we had seen in the Q4 24. Not in a huge way, but still expanding.
What about your optimism at the sector level? Where does that lie?
Finance is back in growth mode. We had double-digit earnings growth from finance last quarter, meaning in the third quarter of 2025, we are on track for another double-digit earnings growth this quarter as well. Uh, Looking beyond finance, I think technology, as our audience knows, and as I've been repeatedly flagging in my writings too, uh, has been a pillar of aggregate earnings growth over the last couple of years, and that remains to be the case for Q4 as well. We obviously haven't seen much in tech earnings thus far, but 15% is the expected earnings growth. My sense is that it'll be bigger than that. It was 27% in Q3. I would think it'll be somewhere in between 15 and 27. And then there is a lot of optimism about the economy, and I believe a number of these cyclical sectors, materials, industrials, even consumers centric industries. I think the outlook for all of those looks very attractive.
Overall, then, do you think Q4 earnings are going to buoy stock prices?
Short answer is yes. And it's not so much the Q4 earnings results, but rather what these companies tell us about the outlook. So, what's happening in the current period, meaning the first quarter of 2026, and also to the extent they can share their outlook for 2026 as a whole. So, uh, you would recall, Terry, I've been writing about this positive estimate revisions trend that we have been seeing the last few quarters. And that, in my judgment, uh, has been a big driver for the positive momentum we have been seeing in the stock market. If that trend continues, meaning estimates continue to go up, estimates for Q1, estimates for 2026 as a whole, then by all means, we will continue to see a positive follow through to the Q4 earnings results in the stock market as well.
All right, want to remind our listeners that in between these podcasts, they can check out your latest thinking on earnings in your written commentary, and that's on the homepage at Zacks.com. With Shiraz Mian, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.